Stocks trade firm after the U.S. consumer inflation print offers hopes of a Fed pause. Utilities and energy perk up while capital goods and industrial sulk in trade. L&T skids on missing margin expectations. Lower U.S. sales and tighter margin hurt Dr. Reddys, while weak volumes at Hindalco's arms Novelis pressures the stock. Godrej consumer perks up on higher volumes and richer margins. Heftier margins also push up Gujarat Gas and Ratnamani Metals. And AM Nayak, after serving with L&T for near 6 decades, will be designated Chairman Emeritus, with present Managing Director S.N. Subramaniam also assuming charge as Chairman from the 1st of October. The move marks the end of an era with Nayak at the helm. Hi guys, good afternoon and welcome to Business Lunch. I'm Pavitra. Those are the top headlines that we have for you today. There's a lot happening in terms of earnings action that is, coming through on the trades right now. But a quick look at just the indices right now, because we once again absolutely flat. This is the fifth time that we broke into the red since the morning. So we opened at the highs, but ever since then it's been a very choppy session, just around 3 points higher on the Nifty right now. So very flat over there. Something that we have been seeing since the morning is the fact that the broader market is holding up a lot better. So you have the mid-cap index, which is still seeing a gain of over 120 points. That's looking a lot better. The small caps also over 0.5% in the green. And that is really helping the advanced decline, which even when the market is so flat, is still at around 2:1 on the advanced decline. The banks also, by the way, holding up quite well today. You have a 210-point move on the Nifty bank, and it is the PSU banks which are pushing harder today. So let's take a look at some of those banking names. Actually, you have IndusInd, which is higher once again after being higher for pretty much this entire week. So that one continues to power higher. A lot of the smaller names, the likes of Bank of Maharashtra, IDFC First, these are some of the other names which are doing well from the banking pack. But like I was mentioning, it is a lot about the earnings reaction. So you have L&T, Dr. Reddys, Hindalco, all three of them which are seeing some sharp cuts come through. These are the three largest losers on the Nifty right now as well. So this is the kind of cut coming through on them. What's also holding up today, in addition to the banking names that I was mentioning, is the Adani, group of stocks. You have Adani Enterprises, Ports, all doing well. There's a board meet schedule where they are considering raising some money. So that is why you have Adani stocks doing well today. So we'll talk more about that. But let's start off with the big reactions on the earnings. L&T missed street estimates and its own guided margin range in the fourth quarter as well. So Rima is here to tell us more about that. Rima, take us through the highlights.
Thanks so much for that. So the big miss in L&T's numbers this time is on the margin front. Margins have contracted by 60 basis points on a year-on-year basis. The street was anticipating flat margins. L&T has reported margins of 11.7% for Q4. Because of the Q4 miss, they've also missed their FY23 margin performance. Core EBITDA margins have come in at 8.6% for the full year, a miss compared to their trimmed down expectations. They'd started the year anticipating a 9.5% margin. They brought it down to 8.9%, and they finally ended at 8.6%. Another reason is that L&T has been an outperformer. It's outperformed the Nifty by nearly 30% in the last 1 year. FY24 guidance, that said, is pretty healthy. It's no big beat compared to estimates, but it's a resilient guidance. Order inflow guidance of 10 to 12%, revenue growth guidance of 12 to 15%. And one thing that the street has liked is that the company is guiding for margin improvements to the tune of 40 to 50 basis points. The brokerage verdict is a bit mixed. So Goldman Sachs has a buy rating, target price 25.40. CLSA has put a target price at 27.90. But Ambit maintains a sell call. They're saying the company is facing increasing competition from Tata Projects, Afcons and Megha Engineering, and MK has downgraded the stock to a hold from a buy rating and kept a target price of 23.03. Back to you.
All right, Rima, thanks a lot for bringing us all of those numbers. In fact, we also spoke with the management, Mr. R. Shankar Raman, whole-time director and chief financial officer at L&T. So listen in to what he had to say on the street's big concern on the margin, as well as what they're looking at in terms of a guidance for FY24.
Project business margin profile would be around 9%, 9 to 9.5%, depending on the type of projects that we receive and the economics that play out. The manufacturing businesses would be all in mid-teens, and the services business would be around 19-20%. That's the mix. 1/3 of our revenues come from services today, and 2/3 come from manufacturing and projects. And hopefully our thrust on services, if they continue and they continue to be as profitable, that also contributes to the overall margin. So my sense is that blended margins would be anywhere between 9 and 10% in a normal situation. We are absolutely on spot as far as Lakshya is concerned. We just completed 2 years and 3 more years to go before the plan plays out. The measure of value creation that we have given Lakshya 26 is ROE. We started FY21 with 9% ROE. We wanted to end 26 with 18% ROE. And we are at about 12.2% as we close 23. And we hope to get to around 14% or thereabouts by the time we close 24.
Right. The key highlight of this conversation was that they are looking for margins to pick up by Q4 of this financial year of FY24, and they do see it in the range of 9 to 10%. So they are positive that it will pick up towards the end of the trading, towards the end of the financial year. But the street is really just not having it at all. The stock is still down around 5% in trade. The other one, which is seeing a big cut today, is Dr. Reddys. It's actually the top loser on the Nifty today, 6.5% gone over there. So Ekta is here to break the numbers down for us. Ekta, take us through what the trouble is and what are brokerages making of this as well.
Well, interestingly, the reported numbers for Dr. Reddys this time round was largely in line. Revenue was up 16% in line with expectations, margins too, and profit was a tad below estimates at around 959 odd crores. Now, the numbers, however, was supported by multiple factors this quarter. The PLI scheme revenue, which stood at around 30 odd crores, divestment of Indian brands to Eris Life Sciences, which was to the tune of 264 crores, Revlimid generic contribution, which is the cancer drug, which has been contributing in the past couple of quarters in the US markets. So the US markets as a whole disappointed as well. For example, the US sales were slower at around $310 million. The street was anticipating at least around $340 million this quarter. Now, the company, however, says that Revlimid generic will continue to be meaningful, though the contribution did come down on a Q-on-Q basis, but that was expected. The company also says that US will be a focus area going forward. India, they reported 32% growth on a year-on-year basis, but on an adjusted basis for Eris Life Sciences, for the divestment to Eris Life Sciences, the growth was around 5%. The company, however, is very bullish on India, and they said that they expect India to grow faster than FY23 going forward. Margins, adjusted margins for divestments, etc., this quarter stood at around 21% as per Antique versus estimates of around 23.5%. The company has said that they will continue to maintain their long-term guidance of 25% EBITDA margins. Overall guidance is that all markets should show double-digit growth as well, but the street is expecting or wanting all of these factors to now come through, considering that there could be an earnings cliff in FY27 for them. Brokerages such as Nomura have reaffirmed their buy despite Q4 being below estimates. Nuvama has said that their core business pain points are visible. They've downgraded the stock. The core margin, according to them, is at 15% at best. Jefferies has a buy, target price 5,600, and Elara has a reduce with a target price of 4,946 on that stock.
All right, Ekta, thanks a lot for taking us through all of those numbers as well as what brokerages are saying about the stock now. In fact, earlier today, we also caught up with Erez Israeli, who's Chief Executive Officer at Dr. Reddys. So listen into what he has to say in terms of their guidance going forward.
We are not giving specific numbers of the product, and what I can say that the product will continue to be meaningful for us and may fluctuate from quarter to quarter, but it's going to continue to be big contributors to our performance in North America. And at the same time, we are ready for a launch of something between 25 to 30 products in the United States.
All right, that is the word coming in from the Dr. Reddys management. But one stock which is doing well today is Godrej Consumers. It's up over 2% after delivering an operational beat in the fourth quarter. We spoke with Samir Shah, who's the CFO at Godrej Consumer Products, and he says that the margin is likely to expand and business momentum is also likely to continue. Listen into what he had to tell us.
And we do expect gross margin expansion in FY24 over FY23. The latter part of FY23 did see a gross margin expansion, but we will continue to see gross margin expansion throughout FY24. We will continue again with category development initiatives and hence higher working media investments, which again, I mean, are seeing results now in terms of the kind of volumes growth which we have seen in India, say in last quarter. We will see what we call as basket of controllable cost reduction. Again, we saw, I think, close to 200 bips of reduction in controllable cost in FY23, and we will see meaningful reduction again in FY24. We definitely do see a very meaningful distribution synergies, and also, by the way, there is equally meaningful cost synergies. But as we had called out, I mean, post acquisition, that maybe we take first 6 months as is, and then we see, both distribution synergies as well as cost synergies, and eventually into the overall performance, which my senses will pan out, I mean, in second half of the year, because first 3-6 months, we just want to absorb it, just have our own internal, kind of plans in place, and then see all the synergies getting played out in terms of end results, which I think will start from second half of the year.
All right, that is the GCPL management sounding extremely positive on both the margins, on the business momentum also going forward, and the stock is happy in trade around 2% higher. It is time for a short break on the show, but when we come back, we're going to shift focus and talk about the global picture. We're going to bring you the big developments that came through overnight. Stay tuned.
The pursuit of inspiration, empowering visionaries to drive innovation. The pursuit for enduring growth, honoring game-changing achievers. The pursuit of unmatched legacy. 18 years and counting. The CNBC-TV18 India Business Leader Awards, as prestigious as the leaders they honor.
Standard Chartered presents India Business Leader Awards, a legacy inspiring excellence, in partnership with Hindustan Times.
Welcome back. Let's now bring you all of the developments from the global markets that we are tracking. The US stock futures are pretty much positive right now, but the big market development that came through on Tuesday was that consumer prices, this is for the month of April, rose by 0.4% if you look at it on a month-over-month basis, and 4.9% on an annual basis. So this is slightly below what was estimated. The core CPI has risen 0.4%. This again compared to March, and if you look at it on an annual basis, it's 5.5%. Both are in line with expectations on the core CPI. So we have CNBC's Rick Santelli, who's here with us to bring us a quick roundup of the basic numbers.
A huge day in the markets as we had the first of two inflation data points. Probably the most important was this morning in the form of the April Consumer Price Index, CPI. And the Consumer Price Index headline up 0.4, exactly as expected. Strip out food and energy, known as core, up 0.4%, exactly as expected. But the next two areas within this report were market moving. Year over year headline under 5% at 4.9%. It's been going down 10 consecutive months in a row since the high water mark of over 9%.
All right, Rick, thanks a lot for bringing us all of those numbers. But with the prices in the U.S. to also the China's inflation number, which came through, consumer price index in China has seen a 0.1% move in April year over year. This is actually the slowest that we've seen since early 2021. And month on month, if you look at it, prices actually declined by 0.1%. Economists surveyed by Reuters expected to see consumer prices rise 0.4% from a year ago and remain unchanged from the previous month. So that's important to track as well. Inflation data in China for the month of April. Finally, let me move from Asia to the UK because investors are keenly watching out for the Bank of England decision due later today. The BOE is expected to hike rates for the 12th consecutive time, and the expectation is that it will be a 25 basis points hike this time around as inflation in the UK, remember, continues to remain hot. Commentary on the rate trajectory, of course, will be key to track, and we will keep, of course, bringing you snippets from that as well, and we will track all of the action right here. But that's what we're looking at right now in terms of all of the global action. We will get into another short break, but on the other side, the Supreme Court has pronounced its verdict on the Shiv Sena dispute in Maharashtra, as well as the Delhi versus the Centre case. So we will bring you all of the highlights in just a bit. Welcome back. We are now tracking some important political updates that have come through. Firstly, the Supreme Court has delivered its verdict on the dispute over the control of the Shiv Sena and the government in Maharashtra. So Abhimanyu is here to fill us in with all of the details there. Abhimanyu?
The Supreme Court has held that had Uddhav Thackeray not resigned as the Chief Minister of Maharashtra, the court would have restored the MVA government. However, Thackeray had resigned even before facing a floor test on the floor of the Legislative Assembly. All developments leading up to Eknath Shinde's assumption of the post of Chief Minister have been held as illegal by the court. However, the government is going to continue since there was no confidence motion which was passed against the previous government and Thackeray had resigned even without facing a floor test. The governor's action of seeking a majority from the incumbent government back then has been held as illegal since there was no confidence motion tabled by any MLA, be it from the opposition or from the dissident side. Also, the top court has deemed the speaker's action as illegal, in which the speaker had designated a new whip for Shiv Sena, making a clear distinction that it's the party leader who decides the assumption of a new whip. That is, in this case, Uddhav Thackeray, and not the legislative party leader, that is Eknath Shinde. It remains to be seen how the situation is going to pan out before a larger bench, which is going to decide the scope of powers of the speaker and is also going to reconsider whether the 2016 Nabam Rebia judgment needs any reconsideration.
All right, Abhimanyu, thanks a lot for bringing us all of those details. But actually stay on, because the court has also delivered its verdict in the Delhi versus the Centre case and has ruled in favor of the Delhi government. This was also a very, closely watched case. So tell us more about that as well.
It's clearly a big win for the Delhi government, as the top court has ruled in Delhi government's favor. The court has made it clear that the elected assembly of Delhi enjoys all rights and powers to legislate on the subjects it has been allowed to legislate on as per the constitution, apart from land, public order and police. Now these three subjects will continue to remain with the Lieutenant Governor, and the court has made it clear that the Lieutenant Governor has been entrusted only with a few subjects by the President as far as his administrative control is concerned, and it's the will of the people, that is which flows through the Legislative Assembly, that is going to decide the fate of several subjects, as well as the administrative control of officers is going to remain with the Delhi government. It's clearly a big win for the Delhi government, since we have seen several clashes in the recent past between the Delhi government and the Lieutenant Governor over administrative control, and several issues of powers and several files which were being returned in the recent past. So clearly the Supreme Court judgment is going to lay the foundation possibly for a better governance in the national capital, and it remains to be seen how early it is going to be implemented, since the Delhi government has been accorded full administrative control over its officers, apart from the subjects which are already under the centre's domain.
All right, Abhimanyu, thanks a lot for bringing us all of that important news from the courts. But with that, let's also bring you some important updates. This comes in from Tamil Nadu, where Chief Minister M.K. Stalin has announced a cabinet reshuffle. So State Finance Minister Palanivel Thiagarajan has been moved to Information Technology and Digital Services, and he will be replaced by Industry Minister Thangam Thennarasu. He will also look after Human Resources Management. And remember, the rejig follows a shuffle in the Tamil Nadu Council of Ministers with the induction of T.R.B. Raja, who is the son of the current Member of Parliament, T.R. Balu. All right, so that is some important news that we are tracking. But with that, we have to bring you some very somber news as we wind down on the show as well. We had founding and managing partner Rajiv Luthra, who passed away yesterday at the age of 67. Luthra was also a director on the board of the network 18 Media and Investments and is survived by his wife and 2 daughters.